So, what if the crazy surge in gold prices and Bitcoin's, sluggish performance aren't just random market noise? What if it's all part of a bigger, carefully orchestrated plan for a global monetary reset? In this explainer, we're going to dive deep into a really fascinating theory that connects these two assets. It's a story of debt, power, and really the future of money itself. It all kicks off with this puzzle that's been bugging a lot of people in the market. For years, gold and Bitcoin were kind of like allies, right? They moved together against inflation and uncertainty. But all of a sudden, we're seeing this massive split. So why is this happening right now? And what could it be signaling for our entire financial system? I mean, just look at this. On one side, you've got gold, the old, timeless store of value just absolutely ripping to new all-time highs. And then, on the other side, you have Bitcoin, the digital rebel, and it's taking a beating after a huge market correction. This growing gap is right at the heart of what we're looking into today. All right, so to really get what's going on, we've got to take a closer look at these two assets. In this first part, we'll explore what makes them tick and how their recent performance is setting the stage for a much bigger story. So, what's the deal here? Is this just a simple case of investors getting a little spooked and moving their money from digital assets to good old physical gold, a classic flight to safety? Or could there be something more deliberate going on behind the scenes, a hidden hand guiding these markets with a very specific goal in mind? To even begin to understand the motive for a plan like that, we have to zoom out and look at the big picture. So in this next section, we're going to examine the growing cracks in the global financial system and see how they might be forcing this whole situation. The global financial system is, well, it's showing some serious signs of stress. The US is dealing with record deficits. Other countries are less and less interested in buying its debt, and inflation just won't seem to go away. And on top of all that, we're seeing this huge trend of de-dollarization. That's countries actively looking for ways to trade with each other, especially for oil, without using the US dollar. That's a big deal. Macro analyst Luke Groman has this perfect analogy for the situation. For decades, the whole petrodollar system has been the foundation of America's financial power. Basically, oil is priced in dollars, so everyone needs dollars to buy oil, which means everyone needs to buy US debt. It's a sweet deal. But as Groman says, you only need a small hole in that system for the whole thing to start losing pressure. And right now, we're starting to see those holes appear. And this slide just nails the impossible situation policymakers are in. They're totally stuck between a rock and a hard place. If they raise interest rates to fight inflation, they could literally blow up the national debt. But if they just keep printing money, they risk everyone losing faith in the dollar completely. It's a lose-lose. Or is it? What if there's a third option they're not talking about? And that brings us right to the heart of this whole thing, the gold first theory. This theory lays out a radical, but honestly a surprisingly simple solution to the insane economic puzzle we just talked about. Analyst Josh Mandel came up with this, and it's pretty elegant. The idea is that the US could restore faith in its financial system, not with some complicated new policy, but with a simple accounting trick, by changing the value of its most trusted asset, its gold. Okay, so here's how the math works. The US is sitting on a mountain of gold, over 8,000 tons. But on the official books, it's valued at just $42 an ounce. That's a price that's been frozen in time since 1971. The theory is simple. Just revalue that gold to what it's actually worth in today's market. So what's the magic number? According to this theory, it's around $16,000 an ounce. Now, I know that sounds absolutely insane, but it's not just a random number. A price like that would give the US enough value to back about 75% of its entire monetary base. In one move, it would essentially put a solid gold foundation back under the dollar almost overnight. $16,000 gold. It sounds like science fiction, right? But what if I told you that if you look back at history, it's not nearly as crazy as it sounds? The next slide has some data that really puts this all into perspective. Okay, this table, based on Luke Groman's work, is just wild. It shows how much of the US debt held by other countries could be covered by America's gold reserves. Now, look back at 1980, during the last big dollar crisis. The US had enough gold to cover 135% of its foreign debt. 135%. Now, fast forward to today, that number has crashed to just 11%. So here's the kicker. A 4x jump in the price of gold wouldn't be some new crazy bubble. It would just get us back to the historical average of 40%. It's about restoring balance, not creating chaos. Okay,
So we've dug into the gold first theory, but that leaves a huge question hanging in the air. Where does Bitcoin fit into all of this? In this next section, we're going to flip the coin over and explore Bitcoin's possible role in this whole global reset.
This is the real head scratcher, isn't it? If this theory is right and gold is being deliberately allowed to find its true price to reset the system, then why is Bitcoin stuck in the mud? Is it just the market doing its thing, or is something else going on? So you've got two main camps here. The first is the deliberate suppression theory. The idea is that powerful players are actively keeping the price of Bitcoin down. Why? Because if Bitcoin skyrockets, it steals the show from their state-controlled gold revaluation. It's a narrative they can't control. The other theory is a lot simpler. It's just a natural rotation of capital. Investors are taking profits from crypto and moving into safer, more traditional assets. And the people who believe in that suppression theory, they point to stuff like the recent liquidation cascade in crypto. In just a few hours, a mind-boggling $19 billion in leverage bets were just gone, wiped out. And the timing of it, on a quiet Friday, just as gold was starting to surge, has a lot of people thinking it was a coordinated attack to keep Bitcoin down. But maybe the most important thing to keep in mind is that this isn't really gold versus Bitcoin. As Luke Gromen puts it so well, they're both just lifeboats in a massive financial storm. Yeah, they're built differently, but they're both designed to get you to the other side safely. It suggests a future where both of them play a huge, complementary role in whatever new system comes next. So, we've walked through the gold-first theory, the weirdness with Bitcoin, and the idea that both are part of something much bigger. Now, let's try to pull all these threads together. Is this all some master plan, or are we just watching the messy, chaotic birth of a new financial world? Because here's the thing. Despite the confusing price action, if you look under the hood, the Bitcoin network is stronger than it has ever been. The global hash rate, which is just a measure of the network's security and power, is on an absolute tear. This kind of suggests that huge players, maybe even entire countries, are quietly getting into the game. And at the same time, the US government itself has become one of the biggest Bitcoin holders in the world, and more politicians are starting to warm up to it. And this slide right here gets to the absolute core of it. This is the fundamental difference between the two. A government can, with the stroke of a pen, change the official value of its gold. But Bitcoin? Bitcoin is different. It's a decentralized global network. It's outside the control of any one country or any one bank. Nobody can just decide to change its price. And that makes it a uniquely powerful asset in a world like this. So where does that leave us? Are we watching a grand, coordinated financial reset play out in real time, with gold as the opening act and Bitcoin waiting in the wings? Or is this all just the chaotic, unpredictable result of an old system finally breaking down? The answer is going to define not just the future of money, but the balance of power for decades to come. What do you think is really going on? One thing's for sure, the next few years are going to be wild.